Okay, so today, we will first talk about what kind of data we are going to cover in the class and what's the institutional background of the data. And then we will talk about some techniques to analyze the data. So when we talk about big data in finance and accounting, we have a different approach to understand the class. So this is also I have been thinking about a lot, how exactly we should organize the class. So when you guys see when you guys see from the computer science class about the textual analysis Python class, you can see that all the computer science class is structured by the techniques. So for example, when you see some Python class or machine learning class, they start with basic Python environment and the Python grammar and about Python functions and blah 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 and this is how typical uh, textual analysis class is structured in computer science. And uh, and uh, uh, and we want a different approach. So we are not teaching computer science major people. We are teaching accounting finance students. So what we are doing is, like I discussed in earlier videos or earlier sections, we structure the class by data, by the data, like what data we analyze for this class, and then how we analyze the data, what research question we can use for the data, and then what's the second data we're going to cover in the class, and what techniques we use to analyze data. So you can see that uh, that we also discovered a way to design this class for accounting and finance students. Uh, for me, I'm coming from computer science major, but I don't want to use computer science the way computer science students learning to teach you guys. I want you guys to learn the textual analysis, big data in accounting and finance using the mindset of business students. So everything from now on is organized by data, but organized by data and organized by first I will talk about the data, and then I will talk about what kind of techniques we can use for analyze data, and what's the data used for. The data is used for help shareholders or creditors and managers and employees. So this is basically the flow of the all for the rest of the videos, rest of sessions. And I will, like for example, I will talk about uh, uh, the quantitative data today, a lot of data we're going to introduce today. And I'll also talk a lot about the textual data today as well. And for each data, I will talk about three things. I will talk about what's the data about. So each data you are not familiar with, what the data structure of the data structure of the data. That's the first thing I'll talk about. The second thing I want to talk about is what kind of things we can do using the data. So that's why I started with this slide. So this slide just give you the information how exactly we use uh, firm data, accounting information, and financial information. How exactly we use that information. So you can see that all the data, all the stuff we talk about in the class serves different people. So investors, that's a most important group. We use the financial data and accounting data. We analyze the data to provide decision-making support for investors. And then we have managers as well. So basically, you analyze the firm data we are going to talk about. You provide decision-making help for the managers, and also you analyze the firm data for creditors, suppliers, customers, auditors. So basically, the idea here is the firm. We analyze the data for different people. We analyze the data for shareholders. We analyze data for managers. We analyze data for the creditors and the suppliers and customers. One question you may have in mind is why we want to separate the purpose of the data for different people. The reason is because we analyze the data in a different way for different people. For example, for firms, we analyze the data for shareholders in order to inform shareholders whether the firm can make profit in the future, whether the stock price of the firm will go up, should the investor invest in the firm or they will just quit. So shareholders, they care about the value of the firm. So what does manager care about? Manager care about the firm, about some corporate decisions. They care about whether the firm should invest in some industry. They care about the cash flow management of the firm. They care about employment, hiring decisions. So the reason I want you guys to be aware that we analyze the data for different um, stakeholders. The reason is because different stakeholders have different needs. The investors, they want to know the value of the firm in the future. That's when you analyze data, you should make, when you want to make investors happy, you need to get the value of the firm, and you want to get the value of the firm um, in order to help investors to make investment decisions. For managers, you want to you want to analyze the data to help managers to make investment decisions, merger acquisition decisions, cash flow management decisions. For creditors, you want to analyze data to help creditors because creditors want to know whether the firm are able to make payments in the future. So you want to provide whether the firm have stable and safe cash flow in the future. That's how you analyze the data for creditors. For suppliers and customers, they also have different needs. For auditors, you want to analyze the data to make sure the firm is not faking their financial statements. There's no fraud. There's no fraud. So I want to provide a framework here because you want to keep in mind that you analyze the data, you have to know your audience. If you want to analyze the data for investors, you want to make sure this is what the investors want. If you want to analyze data for creditors, you want to make sure you analyze data for that's what creditors want. The creditors want whether the firm can generate stable future cash flow. You want to analyze the data for auditors. You want to make sure auditors want whether the firm is making fraud or making some mistake in their accounting reporting. So each of the stakeholder here, no matter whom, they have their own unique needs to understanding the firm data. So your purpose is for this class, even you get a job, or even you go to PhD program. I know lots of you guys go to master program. You have to always remember who are the audience for your data analytics. Once you know the once you know the audience, you know the demand. Once you know the demand, you can tailor your analytics for the particular groups. So we have different people here. So you know if you know this is a demand for shareholders, you will trying to make them happy. So this is the audience I want you guys keep in mind. And then I want to give you like a very brief conceptual framework. So why we need some big data, why the big data rises in the recent years. So basically, in earlier years, when we analyze the data, when we analyze the big data to help decision making, either investors and the firms, have limited data. We have limited data to analyze. So you guys know, a long time ago, we have data available only like stock price, earnings, sales. We only have very limited data set to analyze to help investors, to help managers. But in the recent years, there's a booming of the data available for you, which I will talk momentarily. We have a huge data set available for you, and because of the availability of the huge big data sets, so we have to start this class. Everyone in the accounting and finance, before you only can just learn about earnings, sales, you're good. You can get a job. No one will be upset. Everyone will be happy. But from since there's a huge data set available for all of you guys, now all the big four, they want you guys to be able to understand the data, analyze the data. So that's why availability of the data is driving all of you guys to learn the skills and how exactly we understand. We need to understand the data first, and then we need to understand the how we analyze the data, what question we can use to analyze the data. So the reason we are starting all this data analytics stuff is because the availability of big data in finance and accounting, and the techniques, the machine learning become available for us. So this is how we should. That's why we have a booming in this demand from industry. and the course curriculum. So, the next two slides, I will talk about several important things. The first things I want to talk about what kind of data we are going to cover in the class, and each data, how we are going to use it, and also I will talk about I will talk about um, I will talk about how we're going to use each of the data. So you look at this. We have two slides here. The first slide, it's about quantitative data is structured. Why I'm saying this is structured? The reason I'm saying structured is because all the data is numerical data. This all the data here is numerical data. I will go over the data one by one. But the common feature of all the data here is they are all numerical, and they disclosed by the firm. This is not the focus of this class. This is not focus class. This is the focus of the other class I will be teaching. But I want to give you guys the big picture. In the data analytics, in accounting and finance, we can divide into structured, quantitative data. And also the next slide. So this is the focus of the class. All the data here are unstructured, qualitative. So what do I mean by unstructured? They are textual data. They are image data. Sometimes there's a different data, and so this data we have to use different methodology to analyze this data compared to the data we discussed, numerical data we discussed earlier. So I want to spend some time talk about the two slides, the structured quantitative data. You see, the keywords here is structured and quantitative. The reason why these are keywords because these are ready to use it's a ready to use, and this numerical data is structured quantitative. And then the second slide is unstructured qualitative data. So everything here is qualitative, textual, image, and stuff. So this will be for the following semester. For the other class, I will focus on cover this one, the numerical data structure. This class will focus on this unstructured qualitative data. So how about let's start with the structured quantitative data, and you can see what's the idea behind it. So basically, when you guys, this is the most of data firm are using, big four are using, investment company are using, hedge fund are using. This is the most common numerical data industry and academics are using. So basically, we can take out this. So what we have is income statement analytics. So income statement have a lot of information. They have the sales, they have earnings, they have expense, they have a lot of information. How exactly we can analyze the income statement to predict the firm future performance? That's basically one big idea behind the income statement analytics. And another idea we have is how you can predict whether the company is making fraud. Are they faking their accounting reporting? Are they faking some earnings, sales, or expense? So these are all some common use of income statement analytics. So basically, you need to understanding the sales, expense, and the different items, and to be able to predict the firm future performance, help investors, and also predict the fraud. This is income statement analytics. So balance sheet analytics, it's have a similar meaning. So balance sheet, the difference is balance sheet has information about assets, liability, and equity. How you combine all this information to predict the future firm performance, and also balance sheet can help you to understand the firm liquidity. So, for example, earlier I was talking about the creditors, right? I talking about the creditors. So, what creditors care about? Creditors care about whether the firm can make a stable cash flow in the future. In that case, creditors care about the balance sheet more than income statement, because balance sheet provide more information about the firm's ability to paying future cash flow in the future. The balance sheet contains more information about future cash flow than income statement. So the creditors will care about the balance sheet more than income statement, because income statement can provide more relevant information for the creditors. In a different way. So we talk about shareholders, investors. Investors in a different way. Investors will care about both. Investor will care about both income statement and balance sheet, because income statement is a very important information source for investor to tell whether the firm can make future profit or not. So you can see that the different people, different audience here, we have different focus on different data. You guys can see that that like managers care about more internal information, shareholders care about different. So basically, different audience care about different information source, and this is some examples we're talking about here. And we also talk about the uh, uh, analysis, stock analyst data and analyst report. Like in the stock market, we have analysts. Analysts provide recommendation. Analysts provide price forecast. Analysts provide earnings forecast. So basically, let's say Google. Google has about like 40 analysts following Google, predict Google price, predict Google fundamental analysis, provide recommendation for buy and hold for Google. So how to understand this data is also important. This is also important. This is another data source. Another data source which is important. At least you should know the data is important here. So basically, my idea here is when you get a job in the big four or mutual fund companies, hedge fund companies, this is the data you can access and you can analyze, and what the data is what for, what's the structure, what's the data structure of the data, and how you use the data to help investors, managers, and different people. So that's what you need to keep in mind throughout the class. And we also have a lot of compensation data. The compensation data provide idea about how the CEOs are paid. So in the current corporate finance and capital market, the CEO is not paid by the fixed amount. So for example, taking example of Apple. So the CEO of Apple is not just paid by a fixed amount, like $20 million. It's not like that. There's a fixed pay. There's also a performance-based pay. What do I mean by that? So for example, if I'm a Google CEO, hopefully I will. Hopefully I'm not. Hopefully one day, not me. Hopefully you guys will be one day Apple or Google. So let's say one of you guys, that's Su Ming. I saw Su Ming name here. Let's say Su Ming become a Apple CEO. Let's say 5 years, 10 years. So the pay structure will be like this. You will have a fixed pay, like say $1 million or $2 million, like fixed pay. Some CEO only ask for $1. There's a very interesting story. Like some CEO, they just want $1 for fixed pay because they want to help. They want to signal the investors, I'm not here for money. I'm here to help the firms. Okay, let's put that story aside. Let's just focus on what we're trying to say here. Let's say let's say Su Ming become a Apple CEO in 5 years. Her fixed pay is $1 million. That's the fixed pay for Su Ming. There's a lot of performance-based pay in the contract. So what do I mean by that? For example, if the CEO, if the Apple earnings hits $10, you will get another $2 million to reward you because you hit earnings for $10. If your stock price hits $40, you will get another $5 million because your stock price, Apple stock price, hits uh, the 5 million $40. And also you will have some reward as options. Company will give you options to motivate you to work harder, because the options when you put on hand, the higher the stock price, the more value you will have about the option you are holding. So this is the compensation structure of a typical CEO, the package. So it's not about the fixed pay. It's not I'm paying like assuming $2 million. It's about $1 or $2 million fixed pay. It's also conditional pay based on the earnings, conditional pay on the sales, conditional pay on the stock price, conditional stock options. So there's a lot of conditional pay based on Sumin's performance. So this is a very complicated contract, very complicated contract. So how you should analyze this data, this is also important. As a accounting or finance major, I think you guys should and know all this data and how to analyze that. But we are not that this is we're going to cover for other class. You guys can can check out the other class too. So the conversation is it's very complicated in the U.S. and even in China it's complicated too, because we want the CEOs to work harder to drive them to deliver good performance. So that's why we have a fixed pay. We have a lot of complicated performance-based pay to motivate CEOs to work harder. The performance is based on stock price, earnings, and a lot of stuff. Very complicated, very complicated. So you guys can check it out. Okay, this is one data available there. And another thing I want you guys to be able to understand is bank loan data. This is very important data which is available. So how bank loan data is about the loan contract. So let's say Apple borrow money from Bank of America, then there will be a loan contract between the Apple and Bank of America. And the loan contract has different information. For example, loan contract has what's the loan amount? Is Apple borrowing like 1 million trillion, $10 million? The loan amount is in a loan contract. And also, what's the loan spread? So what's the interest rate on the loan and the duration? Like how long is the loan? And also about the payments. Is the payments is the installment payments? Is like a quarterly payments, monthly payments? How exactly Apple pay back Bank of America? And also, there's another important point about a loan is there's a covenant. There's a covenant on the loan contract. What does covenant mean? Covenant means there's a condition, there's a matrix you put on the loan to monitor the borrower's current conditions. For example, I give you guys an example of covenants. For example, one covenant, typical covenant is uh, the Apple's earnings has to stay beyond $5. If it's dropped to below $5, and then the covenants will be violated, then Bank of America can get involved to restructure the loan. Let me just repeat it one more time. So for example, one typical covenant you can see is Apple as a borrower. The Apple has to maintain $5 earnings. Beyond that, if the earnings drop below $5, that means the covenant will be violated. Then the Bank of America can step in, tell Apple, well, your earnings is below $5. I worry about you, Apple. I worry about you. You got to raise your earnings. Otherwise, I'm going to restructure loan. You have to pay me earlier. So there will be penalty. There will be more monitoring if the covenant in the contract, in loan contract, is violated. So the earnings is just one type of a covenant. There's a different covenant. For example, the cash flow has to maintain at a certain level. The managers has to do something. So basically, covenant is just one way Bank of America use to monitoring Apple. Make sure Apple is on the right track. Make sure Apple is making money. Apple is have a stable cash flow. That's just one way Bank of America is using that to monitor Apple. So this is bank loan data. So bank loan data is complicated because it has a loan amount, loan spread, the covenant data, and loan interests, and also information about the bank, information about the borrower. So this is also important data all of you accounting finance majors should understand and be able to analyze. You analyze this data, you will know how Apple is doing. You will know how Bank of America is doing. So by analyzing the data, you will know both the health of the borrowers and health of the lenders. You will know how the Apple is doing, how the manager is doing. So this is very important data. I want you guys to keep in mind to do that. Okay, this is the bank loan data. And also another data is patent data. Patent data is firm has a lot of patents. So for example, the COVID-19, the vaccine, Johnson and Johnson developed COVID-19, the vaccine. So this is a patent. They have to file a patent to protect the intellectual property of the vaccine for COVID-19. Johnson has to file. Johnson has to file patent to protect the intellectual property of the patent, the vaccine for COVID-19. So the firms file a lot of patents to protect their intellectual property. Why I'm saying this is important data all accounting finance majors should understand. Because look at the world. Look at the have you ever checked the stock market, like following the past years? Everything is driven by technology. All the stock price, all the market is driven by um, high tech, emerging technology. The Amazon AWS, the Google, the deep brain, the machine learning AI, and the Tesla electronic car and autopilot. So the whole stock market right now in the US, everything, most of 70% of the value is driven by technology. So how exactly you can understand this technology? You have to understand this patent data. By analyze the patent data, you have several information. You know who are filing the patents. So for example, Johnson & Johnson are filing the patents, Google filing the patents, Amazon filing the patents. You know who are filing the patents. And then you can see what kind of patent these are. Is Johnson & Johnson developing a vaccine for COVID-19? Is Google filing the patents about AI and machine learning? Is Amazon filing the patents about the cloud computing? So basically, by analyzing the patent, you can know that which firm are doing innovation, which firm are doing and not. Because only the firm are doing innovation, technology innovation can file patents. That's one information you can get from the patent data. And also, you know what kind of patents they are doing. Are firms doing research on the AI, machine learning? Are firms doing research on Fintech? Are firms doing research on the vaccine for COVID-19? But analyze the patent data, you know what kind of research the firms are doing. You know where is the technology going. And also, patent data has another information about the citation. So for example, you can know how many people are using the vaccine for COVID-19. So the patent data provide information is how many people are using these patents. So for example, Jason and Jason file a patent for COVID-19 vaccine for COVID-19. You can observe several information. You can observe who is filing the patent, Johnson and Johnson. What's the patent for? It's a vaccine for COVID-19. And how many people are using the patent? You can see the different people, how many firms actually are using the patent. And also you can see the value of the patent. The value of the patent is measured by the market reaction. So basically, when Johnson & Johnson announced they have the patent, the stock price of the announcement is the value of the patent. So for example, when Johnson & Johnson announced the patent of the vaccine for COVID-19, if the stock price raised by $1 million, that means the value of the patent is 1 million. If the stock price raised by $10 million, that means the value of the patent is the $10 million. So we use the market reaction of the patent announcement to measure the patent value. So these are the several things you can get from patent data. You know Johnson & Johnson are filing the patent. You know who are filing the patent. You know what's the patent about? It's about the vaccine for COVID-19. You know the value of the patent. Using the market reaction to the patent announcement, you know the value of the patent. And you know who are using the patents. You know other companies are using the patent to develop the new research. You know who are using the patent. So there's a lot of information. A lot of information you can use the patent data. And there's also patent description. The patent description is describe what's the patent for. It's a textual data. It's a textual data. It's a textual data. Basically, the textual data about patent. The patent description describe what's the use of the patent, how the patent is used for, what's the classification of the patent, what's the purpose of the patent. So that's the textual data for the patent. So the patent data is also complicated and useful. So coming back to my point, why the patent data is very important for our major, because from the patent data, you can understand what kind of technology the firm are developing. You understand which firm are doing technology, which firm are not doing technology. For those firms who are investing heavily in technology, these are the people, these are the firms may grow in the future. For those firms who abandon the technology, you don't want to invest in them. They may be out of the game in couple of years. So by analyzing the textual data, by analyzing the patent data, you will know the direction of the emerging technology. You will know who are developing technology. You will know the future of the stock market. You will know which firm will be doing well. So these are very important data sets. I want all of you guys to be aware of, and you can check out this data. Okay, these are all the numerical data. The reason I put all this data together, because they are ready to use. They are structured. They are ready to use. So we don't need a Python for them. We need more of a SAS data R to analyze this data. We don't need much Python for analyzing this data. These are all firm disclosed data. So these are the one slides I want to share with you guys. These are the structured quantitative data. And here, this is what we are going to spend a lot of time on to make sure you guys understand the rest of the data. These are unstructured, okay? This is what you guys have to master this for the rest of semester with my help. We all work together. So let's go over the data like we did one by one, so you guys can understand. You guys can understand the data one by one to see what is going on. So the first data is annual report on the conference call. So annual report and the conference call, I don't have to mention the importance of the data. This is the most important data, textual data for accounting and finance major. And that's why you guys, we have assignment on the conference call data. You guys need to know how to do the conference call, the textual data. And I don't want to spend too much time talk about the data here, because the next class, the future class, I will talk about each data one by one. So for example, next class, I will talk about the annual report and conference call in details. I will give you example of conference call. I will give you example of annual report. I will talk about the structure of the data, and I will talk about how exactly we can use the data to help investors and managers. So I'm not going to spend too much time to talk about the annual report and the conference call here, because we're going to spend a lot of time to talk about the example of conference call, data structure of the conference call, and also how we use the data to analyze the manager and accounting. But the idea here is this is one of the most important data all the accounting finance majors should be aware of. And another thing is I discussed in the earlier step, to analyze textual data, there's 3 steps. Okay, 3 steps. The first step is you crawl the data. You crawl the data online. Step 1. Step 2, you parse the data. You make unstructured data structured. That's step 2. Step 3, you analyze data. You get the valuable information from the data you parsed, and you use that to help investors, to help managers, to help the creditors. Remember there's 3 steps of data analytics. Okay, let me repeat it one more time. Crawl the data, and also passing the data, make the unstructured data to structured, and then you get the information out. You retrieve information from the data you passed, and to help investors and the creditors. our assignment will cover the 3 steps. Our assignment, you can see the 2 assignments have the 3 steps. How to crowd the data. We have that in the second you guys were talking about what's the difference of the project and the assignment. Okay, that's just use the term project. Okay, well, for the two projects, the first project we don't have the crowding data because I want you guys have a step by step. So for the first project, you guys only have the step 2 and step 3. You only pass in the data and get information out of data for the first assignment project. For the second project, we have the three steps. The second step project, you need to know how to crawl the data. Step 1. For the step 2, you need to pass in the data. For the step 3, you need to analyze the data, retrieve the information. So for the second project, you will see the completely 3 steps: crawling data, passing data, and analyze the data. But for the first project, you only have 2 steps: the second step and the third step. Just because I want to make the first project a little bit easier for you guys, so you guys can go back to ask questions about Shirley and Emma. Okay, this is about the most important textual data, and also for material news. This is the reason is because material news cover everything. So for example, I get a message saying my internet has some problem. Is my okay? Is my video okay? Can you guys? Okay, excellent. So anytime, if you guys don't see me, if there's any internet disruption, let me know, because I don't want to keep talking here, blah 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 blah, and you guys actually don't see me, and then I have to talk again. So if you see any problem with internet issue or the recording issue, please stop me. We can wait a little bit after the internet coming back or reconnected. So, but so far it's good, right? You guys heard me clear now? Okay, excellent. So I was talking about the firm material news. That's where another important information you guys should be able to analyze. That's why this is a second project. The second project you guys doing is the firm material news. So what does firm material news cover? They cover everything about the firm. It covers, like, if the CEO changed their compensation, yeah, that's in the material news. If the board of directors changed, it's in the news. If the firm want to acquire some company, that's in the news. If the anything about the firm, it's in the firm material news. That's very important. Think about it. If you want to understand the firm, you have to understand the news of the firm. Does it make sense? The annual report, the problem annual report is annual report. What's the frequency of the annual report? Once a year. It's not timely. Every year you get annual report. It's a little bit too late sometimes. You want sometimes, so you want some real-time information. So annual report is once a year. Conference call is every quarter. So my point is, annual report is once a year, and conference call is every quarter. So these are the information you can only get either once in a quarter or once a year. But the material news is what? When the firm has a news, they have to tell investor within 4 days. Okay, 4 days. 4 days. So basically, so let's say I want to change the CEO. Within 4 days, the company has to file the news to make the investor be aware the event. Okay, so between the event day and the filing day, it's 4 days requirement. 4 days. That's very timely information. That's why you need to understanding how to analyze the firm news. If you are able to analyze the firm news, you will have huge information about the firm, and it's a timely information. Does that make sense? So this is why the first project, you guys analyze the conference call. The second project, you guys analyze the firm material news, AK. By the way, just give you guys some background. We'll talk about more about data structure of AK and stuff. So after 2006, after 2006, firm need to file AK within 4 days of the event date. So whenever everything happened, firms has to file the news within 4 days. But before 2006, it's 14 days. So before 2006, the firms need to inform investors about the events within 14 days. And after 2006, it's 4 days. So you can see that there's a regulation change. There's a regulation change in 2006. We'll talk about all this stuff in the following semester because, like I said, what's the class different from computer science class? In the computer science class, we start with Python program, Python environment. That's the computer science way to teach textual analysis. But for finance and accounting students, the way we teach you guys is you understand the data, the structure of the data. You understand the regulation. You understand the rules on the data. And then you understand how exactly we analyze the data for investors, how exactly we analyze data for managers. This is how we teach textual analysis and data analytics for finance and accounting. We focus on the data in our world and understanding the structure of the financial data and understanding the data is used for whom, for investors or managers, for whom. So let's see. So this is, we're going to cover all the details about the data in the following sessions. So I want to give you guys some examples how you guys can use the data. So for example, so I want to give you several examples. So for example, um, uh, sometimes we want to know a firm's risk, some risk. So for example, political risk. So think about it, like some companies are kind of exposed to political risk. For example, uh, um, military companies, right? Some companies making like missiles, some making like a spaceship, like this company, they are very subjected to the political risk. Some companies are not, like Walmart, this kind of retail investors, they have less political risk. So so how exactly we can measure the political risk of the firm? So how do we know some companies, like when the U.S. president changed from the Donald Trump to Biden, how do we know the political risk will affect some company more and affect some company less? So how do we know political risk of company? So this is something you can use the textual analysis. So basically what we can do is the managers, they're kind of talking about political risk of the firm. So for example, some companies, some CEOs, they talk, oh, our firm is subject to severe political risk. When the U.S. admin government switch their leadership, we will subject to huge uncertainty about the leadership of the U.S. government. So the managers will talk about exactly the firm's exposure to the political risk. And so using this data, you can actually using the data to extract the political risk the manager was talking about and use that to measure the firm's political risk. So that's the idea. That's the idea of how to use this data. That's the idea of how to use data. Same as the climate risk. Same as the climate risk. So so like architecture firms, like architecture firms, farmers, they are more subject to climate risk than other manufacturing companies. So these executives will talk. They will say in the conference call or in the news, they will say, well, we have a storm in the recent years, so we cannot recover until next year. So the companies will discuss about their exposure to the climate risk in the conference call in the news. So what you guys need to do is you guys need to extract, you guys need to retrieve this information from textual data, so you can know which firm are more subject to climate risk, which firm are less subject to climate risk. So that's the idea. So why we want to have this all textual data? Because this textual data can provide some information you can never imagine. The data can help you to measure the political risk of the firm. The data can help you to measure the climate risk of the firm. The data can also help measure the personality of the CEOs. So, for example, you guys see how I talk. Oh, Sean is kind of not introverted person. Sean is like outgoing. I like to talk. Have keep talking. So from my talking, you can kind of sense my personality, right? You can do the same to measure CEO personality. From the CEO's talking style, you can measure the CEO's personality, their style, their whether they are introverted or outgoing. So so what I'm saying is, using all the textual data, you can measure a lot of things you can never imagine. You can measure the firm political risk you can never measure before. You can measure the climate risk you can never measure before. You can measure CEO personality. You can measure the sentiment of the firm. You can many things using the textual data. That's the beauty. That's the beauty of the data, because the data contains so much information. Because the data contains so much information, and then you can use the data to measure a lot of things. You can measure a lot of things you can never have access before. So, and you guys have a project. You guys have a project by the end of semester. You need to kind of develop like one project, like using the data we talk about in the class, to come up with something help investors, help managers. So this is something you have to keep in mind. Maybe you can think, maybe I use conference call to come up with some new measure to help investors. You can use the firm news, the AK, to measure some information, to extract some information to help managers, creditors. So you guys have a project, like open project, like I discussed last time. You guys have a project to use this data to measure something new, to either help investors or help managers, to help to predict stock price, to do everything. So this is the so one project by the end of semester I will talk about more, and just use the data we talk about in the class to measure something you find interesting, and then you tell us why this is interesting and why this is useful. So this is the textual data. This is textual data. It's about we will talk about the data structure of these two data format. And so idea here is we can use this textual data to measure a lot of things you can never measure before. That's why we need I think every accounting finance students, they need to know the textual analysis and data analytics in order to be successful in this career. This is one two important data. And social media data. So why the social media data is important? So have you guys read the Apple's Twitter? Apple actually put a lot of information on their Twitter. Um, they talk about a lot of. Have you looked at the Dropbox, their Twitter information? So firms also talk about a lot of information on their Twitter website. So these are information you can use to analyze the firm, analyze the firm's information, and help the firms to understand. Uh, uh, so the idea here is the firm also talk a lot on their social media website, Twitter, and some platform. These are also important information. You should be able to crawl the data. You remember the 3 steps? Crawl the data, parsing the data, analyzing data. The 3 steps. You can do the same thing. Let me give you guys one example. What I did for my project. So also you guys will discuss in the following. So what I found is like some company saying bad things about other company in their social media website. Like I give you example. So Apple on their social media website, they are not talking about just about themselves. Um, so let me go back to the let me go back to the example. So let me go back to the example. So let's say normally when we see the cases, Apple talk about themselves, right? Apple talking about my product is good, my iPhone is fantastic, my MacBook is so normally firm talk about themselves, but what we found is Apple on their social website. This is a hypothetical example. I'm not talking about Apple. This is just it's just I made an example just to make it easier. So on a social website on a Twitter, Apple not just talking about themselves, their product. Apple talking about Google's product. They talk about the Google product sucks. Function is not stable. Blah 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 blah. This is a very interesting thing we found from social media. What do we found in social media? We found companies not talking about themselves on the social media. Companies they talking about other companies' product on their social media. This is very interesting stuff. Once you're using the social media data, and we want to analyze why company doing that. We found when Apple is talking about Google's product has some quality issue. That means what? That means Apple do not have the same issue. So the idea here is so let's say Shirley, if I in my WeChat, if I talk about Shirley is not good at Python, that means I'm signal I'm good at Python. So basically that's the idea. The company trying to talk down other company to signal they can do something other companies cannot do. This is very interesting stuff we found from the social media data. And uh, and uh, and and a lot of companies are doing that. It's not just I remember one company they sabotage Dropbox. I think it's great scale. I forgot the company name. So Dropbox competitors talking about Dropbox product is not good, has some issues. The company itself, because the company itself they do not have that issue. So the company kind of talk down the Dropbox, talking about the Dropbox has the issue about the product quality of the Dropbox. So the idea here is idea here is if you can analyze the social media data, you can do a lot of things. You can see how the company kind of talk bad things about other company and why they do so. In our case, we found the company talk about bad things about other company because they want to signal they can do something the other company cannot do. Like the example, I talked on Shirley. I can signal Shirley is not good at the Python. I'm good at, but I just but by the way, Shirley is very good at Python. Okay, this is just fake hypothetical example I'm just talking about. So this is this idea behind this. This is idea behind this. So so you can do a lot of things using this social media data. And so what's the difference between the social media data and the annual report and the conference call? The difference is the annual report, conference call, they are very official data, official. The firms do not when they talk they're very cautious. There's a legal issue there. They don't so you never see the annual report like Apple talking about bad things about Google. You don't never see that in the annual report. You don't see that in the news. You don't see that in the conference call. A little bit in conference call, a little bit in a conference call. Okay, but you see that a lot in the social media. The reason is because social media is a lot of is unofficial channel for firms. So they can talk about something more aggressively in the social media platform. So that's why in the annual report you don't see firms talking about bad things about other firms. But in the social media, because this is an unofficial channel, you can see that the firms talk a lot of things about bad things about other firms. So you can see different data is different. Annual report is official finding. Social media is unofficial. So different data set will be used for different purpose. This comes down to my earlier point. As accounting finance students, you not only need to understand the techniques of the textual analysis. The more important thing is I'm repeating this. The more important thing is you have to understand the nature of the data. I might say this again and again. So for textual analysis required for accounting and finance students, the techniques of the Python is just one part. I want you guys to understand the nature of the data, the data structure of the data. That's very important for you because if you just only want to focus on the Python, you don't have to be a computer science. You can just go computer science major. For finance and accounting, you need to understand the nature of the data structure of data, and how the data is used for investors and the managers. That I'm keeping emphasizing that point. Okay, for the rest of the semester as well. Okay, this is the annual report conference call, and we have the form materials, we have the social media data, and also we will briefly cover in the semester, we'll cover the mutual fund filing. So what's mutual fund filing? So mutual fund, they also file stuff. Mutual fund, what do they file? Mutual fund will tell investors about their future investment plan, their future strategy, and also their holdings. These are also textual data. So for example, if I'm a Fidelity mutual fund manager, Fidelity is a huge US mutual fund. So in my Fidelity mutual fund manager, what I do is I will file a form NCSR. I will talk about my risk perception of the market. I will talk about why I invest in some stocks, not other stocks. I will justify my portfolio choice. I will talk about my perception of the market. I will talk about my risk perception of the stocks. I will talk about the market overview, overlook. So mutual fund managers will talk about something in their mind regarding the market, regarding the portfolio, regarding a lot of things. These are all textual data. You can analyze that. Okay. Mutual fund managers also will talk about their holdings, that which stocks they invest, which stocks they will sell. These are the textual data you guys can also analyze. So these are the data you should be aware. So for using the data, you can analyze a lot of things. You can analyze why mutual fund company want to invest in Apple. That means Apple may be doing well, and also you can see the mutual fund performance, right? So there's a lot of things you can do, analyze the data. So this is the mutual fund SEC findings. And we also have CSR report. CSR means what? CSR means it's a corporate responsibility. So for example, later on I will show you Walmart. Walmart spend a lot of money on environmental improvement and also sustainability. So companies, the idea of the current corporate finances, we don't want any company just want to make money. We don't want like Apple, Google, the company just everything is driven by profit. We want company to make money and sometimes company to be a good citizen in the community. What do I mean by good citizen? Means company will just help the environment. Company will help improve the poverty. The company will like for example during the COVID-19. We don't want the company doing the COVID-19. They just want to making the profit from those suffered people. We want a company who can use their resource to help suffer the people during the COVID-19. So these are the CSR stuff, which are important, very hard in a recent corporate finance. So we want a company not just to make money, we want a company to help the society, to help the community, to help people need help, in addition to making money. So the CSR report is the company report their activities. Company will report what's the project I used to help hungry people, what's the project I helped, I invest to help the people suffered from COVID-19. So CSR's report is also a report companies used to report their activity to help the community, to help the people who need help. So these are the CSR report. These are also textual data. This is also another data source you need to be aware of. You need to be able to analyze. Okay, we'll talk about that in the following videos. And the proxy statement. What is a proxy statement? Anything about corporate governance is in the proxy statement. So for example, CEO compensation is in the proxy statement. Board of directors is in the proxy statement. Auditors in the proxy statement. So anything in the corporate governance has to be contained in a proxy statement. So proxy statement has a lot of information about the compensation, about board of directors, about how the board monitor the firms, about auditors, blah 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 blah, a lot of stuff. Okay, so this is also textual data. You need to analyze the textual data to understand the corporate governance. This is the proxy statement. We also introduced the data for the following semester. Another one is Form S1. So IPO. So when firm trying to file IPO, they have to file Form S1 form. A firm will introduce their business model. Why the firms think they can go IPO, go public? Why the firm can actually making money in the future? So the IPO Form S1 kind of telling investors why I can go public, why I can make cash flow for the future, why I'm ready for going public. So this is the form used to inform future investors about when they go public. So this is IPO information is also textual data you can use. And the SEC common letter is also important data. So what's SEC common letter about? This is SEC inquiry of a firm. So for example, if I'm Apple, I'm always use Apple as an example, just I don't know, just for convenience. So if I'm Apple, if I did something wrong, SEC is suspicious about my activity. SEC will give me a common letter, send a common letter to Apple, ask, hey Apple, what are you doing now? I feel I'm not to SEC saying, so is my internet okay? Everything's good? Okay. So Apple will respond to SEC common letter saying, oh, I did this because blah blah blah. Explain that. So SEC common letter is a communication between the regulators and firms. If SEC find anything suspicious about the firm, SEC will send a common letter to the firm. The firm will respond to SEC explaining, oh, I'm doing this because blah blah blah. You maybe don't worry. I'm just doing the right thing. Don't worry. So this is the communication between the SEC and the firms. Most of time, common letter is about disclosure. So what do I mean? So means like if Apple when Apple files something wrong, so Apple some like if Apple didn't disclose some information, Apple did report some wrong information. Sometimes if Apple in a reporting process, if Apple did something wrong, SEC will send some common letter to Apple saying why you are not reporting this, why the number is not consistent, or the number reporting is not consistent. So most of time, common letter is about disclosure of firm. In other words, if some company reports something wrong or didn't report something, SEC will send a common letter to the firm. The firm will explain, saying, "Oh, dear officials, I didn't report because blah blah blah. I report the wrong number because the number is actually not wrong, it's correct, blah blah." So this is communication between the regulators and the firms. And also we have image data. Image data. So the firm has image data. You can use that for trading for a lot of stuff. I will talk about that momentarily. Okay, I will talk about that momentarily. And oh, this is the image data. I will give you guys some example of image data today, and you guys see all the data. So another data we are not going to cover. We are not talking in the class. The reason is because let me just okay. So some information I didn't cover in the class. For example, satellite image, this kind of data. So the reason I didn't cover this because it's very difficult to crawl this data from the website. So all the information, all the data I give you guys are public available. You can crawl them. You can collect them from website. There's some like a proprietary data. It's not available. For example, satellite image data. So what's the data about? The data is, for example, it's for example, sometimes if you only tell whether Walmart is doing well, uh, there's a satellite can monitoring the Walmart parking lot, so you can track the Walmart parking traffic using that information to predict the Walmart future sales. So that data is proprietary data, which means you cannot find that online. This is some commercial company collect the data, using that data to analyze the retail stores performance. So I didn't use that in a class because all the data I was talking about here, they are all available online. As long as you know how to crawl the data, how to parse the data, you can use that for your future career and the research, and also for the industry analysis. There's some like data you don't have access to. So for example, the data I was talking about, um, It's useful. It's useful. For example, if you know the Walmart parking lot traffic using the satellite, if you use the satellite to monitoring the Walmart parking lot traffic, you can use the parking lot traffic to predict the Walmart future sales, future performance. But you don't have access to your data. You do not have access to your data. So that's why I don't cover that in the class. I only want to cover the data which is available for you. You guys can collect on the website. You guys can pass in it, can analyze it. So most of the time, the availability is important. The data availability is very important. So that's the two parts of the data we cover in class. We will cover about we will cover about the we will cover about the we will cover the numerical data. We'll cover the numerical data, non-numerical data. So let's just give you a summary of what we just talked about. We'll cover about the structured numerical data. This is one slide, and we will cover this kind of unstructured data. But these data are available on the website, so you guys can crawl it. You guys can crawl it. These are available on the website. For the data which are not available but useful, I don't talk about that in the class. I only cover the data you can actually collect from the website. You can download from website, public available data. I don't talk about anything about proprietary data from the commercial database, from the commercial vendors. So this is the structure. We have a numerical data. We have the public available textual data, image data. We have some proprietary image data we don't cover in the class. So what's the next? The final conclude is I want you guys to be able to combine numerical data and the textual data using machine learning. So this is the final step. Okay, this is the final step. So by the end of the semester, I want you guys to know some machine learning stuff and know how to combine the numerical data and the textual data to analyze the data to predict, to help investors, help managers. So one thing I want to suggest you guys to do is you can start to look at the tutorial video, because the machine learning has a lot of stuff, techniques. I want you guys to look at the video I put online. This is about like a 10 hours video about the machine learning. I recorded. I spent a lot of time actually recording this video. You can go online to see Bilibili. So to see Bilibili. I'm a new user. User Bilibili. I used to be YouTube, but I find that YouTube is not convenient for some of the students. So I switched to Bilibili. So I'm new on the Bilibili. I only have 5 funds on Bilibili now. So if you guys like the video, I'm really happy you guys just poke me and be friends. I'm trying. I trying to see. I mean, only if you like it. Okay, only if you like it. So this is I'm new on the Bilibili and also give me some feedback as well. So you can start to check the website to watch the video and also help me to spread the word. You can spread the message to other students, college students. I do spend a lot of time help to get the machine learning tutorial video. So you guys can have some online component. You can look for it. We'll talk more about the video in the later sessions, but you guys just give you guys. I developed a resource here. I will keep updating that. And so these are the data sets. I just want to give you guys uploaded data sets on this. I'm going. Let's take a break. Now. But I will tell you after break what we do. After break, I will tell you guys some information about how exactly we use the information. How exactly we use the. So for the next video, we will talk about how we use this data for investors, how we use data for managers, and what kind of techniques we use. We're going to a little bit more technical side on this. So once we have a break, we talk about the two things. We talk about how we use this data for investors, how we use data for managers, and what kind of techniques we use for the data. So basically, that's for the following for after break. We'll talk about that. So let me first uh, let me make sure. Yeah, yeah. So let's take a break. Let's take a break, and after break, we'll talk more details about how we are going to help using the data analytics for investors, for managers, and what techniques we can use for analyze the data. So okay.